With the ringing of the New York Stock Exchange bell and the roar of a Camaro engine, General Motors is once again a publicly traded company. The initial offering of GM stock was priced at $33 and quickly rose to about $35 a share in early trading. The cash will be used to pay back taxpayers who infused $50 billion into the company through a government bailout.
We've saved this company because the death of this company would have been the death of literally dozens and dozens of communities throughout America. But we did it in an extraordinary circumstance, and now we are leaving as soon as practical. We think we're getting a reasonable return for taxpayers on that investment, and we're getting out.
The stock offering is the latest in a series of head-spinning developments over the past 2 years. In 2008, then CEO Rick Wagoner found himself in front of members of Congress begging for money just to keep GM alive.
Our industry, which represents America's real economy, Main Street, needs a bridge to span the financial chasm that is open before us.
4 months later, he was ousted by President Barack Obama, and the company filed for bankruptcy protection. GM emerged relieved of most of its debt, but mostly owned by the government and saddled with a damaging nickname, Government Motors.
For 16 months since the bankruptcy ended, we've been resolute and disciplined about not involving ourselves in the management and operation of the company. We put in a first-class board of directors, and then we stepped back.
GM's road to recovery has been a winding one, and more work remains to be done. 3 CEOs have headed the company since Wagoner's ouster, and Dan Ackerman now sits in the driver's seat as the reborn company plots its future. The government now owns roughly 36% of GM and hopes to ultimately break even on the bailout. But for that to happen, it needs to sell its remaining holdings for an average of roughly $50 a share. And that could take several years. Mark Hamrick, The Associated Press.